course, there is an Enam Conference which is currently underway. So quickly, let's go across to Dharmesh Mehta and find out what the mood is across the continent in such turbulent times. Dharmesh, morning, and thanks so much for joining us. So what are you picking up from all these, investors? What's the mood like? Because we're, really, traveling through very troubled times. Yesterday, now the Italian bond yields have crossed that 7% mark as well. What are people making of the global situation first now?
Well, as you know, we're just kicking off the conference right now, so we're just at the beginning of the conference, and overall the mood here is people are coming here to India to find, because they find the valuations very attractive, and this is the time when they can actually do more homework and do more research to pick up large stakes in decent companies which are now coming at a good price to them. Definitely there is a concern on the global macro situation, so it's not as if people are going to come tomorrow morning and start buying, but this is the time for them to be here, understand what's happening on the ground, and then take a long-term decision on that.
Right, Dharmesh. Also joining us is Mr. Srinivas and Subramanian, the head of investment banking at Enam. Thanks very much, sir, for being with us. Now, this is an annual conference, like we understand. So, from the last time that the conference was held till date, there's been a big slide that we've seen across the Indian market. So, what's the advice that you're going to be giving out? Is it perhaps a good time now to spend the money that people have been sitting on, or is there a feeling perhaps that there could be further capitulation that's on its way and therefore better bargains?
No, from our point of view, we are very clear that many of the corporates have pushed behind their capital raising plans. I think that the markets being what they are, I think that the capital raising plans will be pushed further into 2012. 2011 there's going to be very little more. But good quality companies are, many of them are sitting on cash. It is those companies which are in the focus on investing and in infrastructure which require cash. So good quality companies are sitting on cash, and like Dharmesh said, of investors doing homework and seeing what is it that they can buy for the long term. Corporates are also doing their homework and seeing what is it that they can look at strategically over the long period of time.
Dharmesh, well, you made of the Indian markets and what everything is happening, the implications for that. Are we likely to break this range, at least 4,700 perhaps in the near term, or perhaps even break the yearly lows that we've seen?
Well, in the short term, you're going to be having volatile times. So you'll have some small corrections happening, depending on what happens with the global situation, which happened yesterday night. So you're definitely going to see some volatility in Indian markets also, because we've still not broken the trend of following the global markets. But people are waiting for some things to happen from the government by which they can start, the entire link with the global markets in India can be broken off, which has been almost following each other since the last 6 to 12 months. So they are looking for those cues, and when you see those kind of things happening is when you will see serious money coming into India.
Right, Dharmesh. In fact, it's just this whole talk is coming just days before the winter session of Parliament begins. A lot of policy action, in fact, expected. But Dharmesh, if I could also turn your attention towards hedge funds, and how do you imagine their position towards India?
Well, I would say majority of them short on India or underweight India as of today, and rightfully so, because in absolute terms, if you look at it, India has massively underperformed the global markets this year. So I wouldn't say they are very optimistic as of today, and as I told you, they will be looking for this kind of cues. In case if that happens, then you will see a lot of short covering also coming into the markets.
Dharmesh, we haven't seen any significant outflows as well, perhaps barring the month of September. Given how turbulent times have been globally, are you expecting significant outflows to take place from India?
No, I think that people have seen worst in India in this year. So if that was the case, they should have exited in this year itself. Well, as you rightly pointed out, the inflows have been actually positive this year, marginally, but they've not been negative. So I don't believe, and where do they go? Because everywhere the situation is worse than India. India has its own set of problems rather than global issues affecting them. So on an overall global macro perspective, India is a good place to hide, subject to they get those cues from the government or policy action happening. Then that will be the place where people will say, okay, things are much worse out except India. So we'd rather be here and be defensive rather than going out and facing those volatile times in Europe and USA and the other countries in the world.
So Dharmesh, if I can take that point forward, there's such a fear of contagion now in the Eurozone, but do you suppose that if the contagion is limited or contained within the Eurozone itself, that the emerging markets and especially India, that could escape a lot of the pain that's being seen over there?
Definitely yes, because we already gone through the pain last year without any problems at our end for the kind of problems that the European guys have it. So I don't think so the impact should be the same. There will be a short-term volatility, but if we get our act together, I think so we can massively get flows versus the other European countries or the other countries which are showing weakness in their economies today. So it's up to India now to perform and get all that money which is out there.
Dharmesh, you keep referring to, for Indian markets, a lot is pinned on any kind of policy action. Which policy action are you hopeful for, with respect to, maybe in the next few months as well, and with respect to finding value in the Indian markets, which side, which sectors, which stocks are investors biased towards now?
Well, I won't go stock specific or sector specific on this show because it's more of a conference kind of a thing. But I would say any policy action right now is good news. So it's not a expectation of what will happen. We want something to happen. So I think the investors will be happy even if they see few things like divestments happening or FDI in retail or the mining bill getting through or the land acquisition act. A lot of those things are happening, and definitely this whole corruption issues or the Lokpal bill gets through, then at least the political problems are out of the way. So as I tell you, there's so many things to happen. So even 3 out of 5 or 3 out of 8 happen, I think so we'll be in a good shape.
And you're confident that at least 3 out of 5 or 3 out of 8 should happen?
I never previous what this would happen, so I'm not confident. As I said, I'm going with zero expectations. So anything happens is great for me.
Alright, let's also bring in Mr. Srinivas and Subramanian once again. So what does the macroeconomic situation for India look like, given that the trade deficit numbers that came in yesterday were quite weak? Rupee is at a 2.5-year low. Where does one go from here?
I think if you look at the overall scenario, we can divide it into 3 parts. The first one is growth through consumption, second is growth through exports, and the third one is growth through investment. I think the first one is chugging across very, very nicely. The export-led growth was also reasonably well until yesterday's numbers came out, which was to be expected given what's happening in the global markets. I think what if I were to take on from what Dharmesh said yesterday, just a few seconds ago, was in terms of the policy measures, how can they influence a positive investment climate in the country. I think that is the cue which people are looking at. So even without that, I think we should be looking not only this year at about 7.5% GDP growth, the next fiscal also broadly should be in that range. But the government has within its policy arsenal things to take it back to 7.5+ growth levels.
Srinivas, we have seen a dip